Hello guys, and welcome to another video still on the basics of trading. On the last video I discussed on different basic terms used in trading, and if you're yet to watch that video, just tap the link in the description box below and you are good to go. Many of you might have heard of different trading apps but then still don't know what it's being used for. Apps like TradingView, MT5 and MT4 Interface. And that is why I made this video, just for you to understand how you as a trader can manually analyze and place trade orders on the MetaTrader Trading Interface. Now let's get straight to the point. Just like the image that is being displayed on the screen, the TradingView and MT5 should be your most prioritized tools when it comes to trading, well, aside your broker. And why is that? Well, let's just say without them you won't have any clue as to what is happening in the market, because just like a visually disabled person, you won't have any idea of what is happening around you. So let's start with TradingView. What is TradingView? Well, it's a platform that offers charting and analysis tools and also real-time market data that enables you as a trader to capitalize off them. Now, TradingView doesn't just allow or offer market data or currencies, but also stocks, crypto, futures, and even indices, and many other tradable assets. And with the help of different technical tools, you as a trader will be able to spot chart patterns and you will also be able to capitalize from it. Now, these tools consist of trend lines, vertical lines, Fibonacci retracement, horizontal rays, and many other tools. And I'm sure many of you watching this video at the moment will think that it sounds odd using just regular lines to determine the direction of the market. Well, I also thought the same thing. But once you get to the advanced part of trading, you will get to understand how and why it's important. Now, since we understand what TradingView is and why it's so important in trading, which I hope you guys do, but if you don't, no worries, you can just rewatch the video, head over to the chat box below and drop whatever question you may have. So moving on, what is the MT5 interface all about? It's basically where you place your trading orders, whether it's an instant or pending execution. And as you can see on the screen, we have the balance, equity, free margin, but we also have margin level, which are only displayed when you place a trade on your MT5 or MT4. Now, starting with the balance, it is the display of the current funds that is available on your broker, which clarifies that any deposit or withdrawal made directly affects the available balance in your trading accounts. And then equity, on the other hand, is the merge of your balance and the current profit or loss that you make on a trade or you're currently making on a trade. As you can see, the current drawdown on this trade is about $1,500, and if you should subtract the balance from the current loss, then you will get the equity. And moving to the margin displayed on the screen is the current price at which the trader used to buy a position on the pair BTC USD. Well, depending on the lot size, which clarifies that if the trader current balance was below $2,000, then he wouldn't have been able to buy a position on that pair with the current volume of 10 lots. So then he would need to cut back the volume at which he will be using to buy a position on that pair. Now, for the free margin, which is displayed just below the margin, tells you how much capital you have left in your balance for you to enter more position on that same pair and with the same lot size, which depicts that if the trader maybe decides to use the same lot size or another position, then the free margin left will be $1,000, meaning that the trader won't be able to place any order on that pair, since the margin needed for one position is $2,800. And lastly, the margin level. Margin level is a metric that helps traders manage their risk exposure. And how is that? Well, it represents the percentage of the account equity that is currently being used as margin for open positions. I know it sounds a bit confusing, but don't bother cracking your head, because what you should actually focus on is the margin and margin level, and with proper risk management, you're good to go. Now that we are done with all of that, how do you as a trader enter into the live market? And just so you know, there are two ways of entering into the market, either through instant execution or pending execution. Now, when it comes to instant execution, you should always understand that it involves entering a position at the current market price by either buying or selling, depending on your analysis, just as displayed on the screen. But when you talk of pending orders, there are instructions that you send to your broker informing them to grant you access into the market once price gets to a certain level in the market. And then there are 4 types of pending orders, which consist of the buy stop and sell stop, and we also have the buy limit and the sell limit. Now, just as you can see, the buy stop and sell stop orders are set either above or below the current market price, and once the order is placed, price would have to go beyond your stop order, thereby alerting the broker to activate your order. And the more price moves towards your direction, the more profit you gain. Now, unlike stop orders, limit orders require you setting an entry behind the current market price. And this image illustrates it perfectly, and you should understand that you would be waiting for the market to move past a certain price level and return back to that level to retest it before finally going in the previous direction. I hope it wasn't confusing, but if indeed it was, then you should probably just go through the video again and you should be able to get more clarity on it. Well, we have come to the end of the video, and please don't forget to like, share and subscribe to this channel. Thanks for watching, and see you on the next one.